Hey, it's Anthony and Tucker here with Land Title. We came to bring you your lender update for the month. Let's talk about Boulder County, January 2026.
All right, so for all of you lenders out there, we're going to have another really good year of supply most likely, but let's go ahead and see what kind of happened in January. So looking at January, we had a really strong under contract month. This isn't the same for all the other surrounding counties. We had a really unique month in Boulder County, whereas you'll see our solds are down a bit. Why is that? Well, we had a soft December, which then leads to the solds to January. So we should be seeing a good number of solds here in February based on our under contract numbers. Also, looking at our active supply, go ahead.
Okay.
Looking at our active supply here, what we're looking at across the county is where's the inventory sitting, right? So there's still a ton of inventory here in the city of Boulder, but where's the rest of it, Anthony?
Well, about half of the city of Boulder is attached as well. So that's a really unique position. But also, Erie has actually come down about 12% from this time last year, giving it only 150 units on the market. Longmont, 250 units. That's 7% less than this time last year. You know, luxury has creeped up a little bit. Niwot's actually got a little bit of inventory right now. But the other two markets that were super important to pay attention to are Louisville and Superior are finally through some of the rebuild houses, right? So they're down in the 30s again, which is way more like what we should expect from them. So that's a really good sign to start the year out with our inventory levels.
Yeah. Now let's kind of take a look at where our solds are happening. Starting at the top on the luxury side, on our solds in the red, we can see, hey, we had some really good sales in some parts and other parts not as good. What does that really mean? Luxury market keeps turning throughout the year. It doesn't have as much seasonality as the rest of the more meat and potato parts of the market. So where we can see is, yeah, we're going to have lower sales really for everything 1.5 million, really a million and under, which is that meat and potatoes. Whereas when you look on the left side, you can see we have quite a bit of supply on the higher end. So starting at over a million, there's a lot more supply in those price bands. But when we get under a million, you're seeing we're not having this giant surge of supply yet, at least for January. We're actually down compared year over year in most price bands by almost double digits in quite a few of the areas. And so I think that's an important piece to track is when does this inventory come on the market? Because we're expecting another high year for inventory for your buyers out there to be shopping.
All right, so that's detached specifically. Now when we touch on attached, this really tells you a little bit different story. And I think over the last 3 years, you see this erosion of buyer activity in the attached market, which has led to a lot of price drops, right? So other than the high-end luxury market, where it seems to operate very similar to the detached luxury market, we really have seen just not very many people participating. I mean, you can see most of these price bands are 20 to 70 or 100% less active units being sold, right? So less sales than we have before. So that's really a cause for concern in so many ways, right? There's a lot of inventory, and if you look at it, 300 to 500,000 from active units of inventory has had a lot more on the market. And that is where a lot of those condos in Boulder are sitting. And that's what's creating that downward price pressure. But good news is too, some of those townhouses out in the county, there's less inventory available for those than there were before. So you're talking 16 to 25% less inventory across sort of those median townhouse projects that you see in the county where, normal median Boulder County residents live, right? So that's not such a bad thing. That's actually a really good thing for sellers in that part of the market. When you're representing buyers though with this, right? That's the whole reason we're shooting this video for you, is to help you out with them. There's plenty of inventory in attached. I think the opportunity in attached is really going to be there this year.
Yeah, and that's something that you can help drive, being on the lending side of, hey, there's a lot of good value in attached. There is a lot of opportunity right now because there's not a lot of buyers for it. Now, looking at detached for our month supply of inventory, once again, we can see it's really a function of cost. As we can look on this left-hand side for this MSI, we're sitting under 2 months until we get to 1.5 million. And we can really see how it's segmenting out of 800,000 and under, 800 to 1.5, and then really 1.5 and over drastically increases that month supply of inventory. And what does that mean? Well, the more affordable homes have more buyers interested in them. So there's more demand, which moves that month supply of inventory down. Now, when we look at our days on market, it's kind of all over the board, but really looking at the super high-end luxury, that is going to continue to grow because there's a lot of things that haven't gone under contract that hopefully will be going under contract this spring. So hopefully we'll be starting to get more real numbers on that days on market because that only counts once it closes.
It's true. All right, so then the flip side of the coin, the attached market that I was telling you about, the struggles, that 300 to 500,000 range, 4.5 months of inventory. this is at the lowest point for the year, keep in mind. So it is going to get significantly worse before things get better here, which really leads you for all that opportunity for your buyers.
Yeah.
That 500,000 up to $1 million, we're at 2.5 to 3 months of inventory. This is the most balanced market that's going to get. This is also going to be under a lot of pressure this year. But good news is we're starting low enough that maybe it won't be nearly as much turmoil as we saw last year in some cases. Then, of course, you've got the luxury market doing what the luxury market does. Sometimes it takes 400 days to sell a house, but other times, it might take, 30 days, right?
Fingers crossed
really
for
depends.
Sundance. Hopefully the lock and leave high-end luxury gets moving.
Yeah, and honestly, it really could, because there's definitely some of that here. There's definitely product available. I think the thing you got to remember here is it's just going to take longer for the stuff to sell. So your buyers, if they're willing to go look at attached, even if it's been sitting there a while, there's nothing wrong with it, right? It could be a really good product. It even could be at a really good price, but until that buyer comes along for it, they might be the only one shopping, which leads them to those better deals they're getting.
Now we're looking at our average sold price for detached, and this is a really important one to look at because we feel like we've been getting some compression since COVID. But let's actually really take a look at our numbers. So first off, month over month, we're up a little bit, which is a good sign. It's hard to tell this time of year just because one or two sales can kind of skew it. But what I'd really like to look at is that TTM change down on the lower right of the chart. And what that's really sharing is the last 12 months compared to the previous 12 months. So it's just seeing how his prices changed from one year to the next year. And where you can see is it's starting to come down in a lot of the areas, which does reflect what's happening in the market as a whole. Remember, this is average, not median. Now, the one area that we saw some strength was Superior and Louisville, and that's been starting to erode a little bit because those were the new homes built after the fires, right? That was a $1.2 million house, not the $800,000 house that was there originally. So it really improved the stock, and so that's where those numbers are finally kind of sorting out and kind of getting shifted out, is where the actual appreciation was, and it has been slightly negative from 1 to 2 years, sliding down. But it's going to really depend on where the supply is versus the demand this year. So you guys as lenders will know as soon as anybody where's the demand, because we're going to have another supply year. And go ahead.
Yeah, that's fine. Keep in mind that TTM percentage change number is like your long-term change over time. So you can see the market that got hit the worst this year is Lafayette, and then the rest of them have been fairly stagnant. When we look into attached, same thing kind of happened. The attached market in Lafayette got hit way harder, minus 14% in the last year. This one, be careful with this because the TTM percentage change for the county looks really high. But if you look at Boulder, 4% higher sales price, which is very misleading because we just aren't selling lower priced units as much. So we've seen a lot more of that higher end lock and leave, very cool stuff. It's skewing in the entire county's data, right? So watch that, but look, Longmont down 8%, Erie down 6%, Lafayette down 14%, and Louisville 3%, right? So not such a big deal, but you do need to watch those. Some of those are really extreme, where the city of Boulder, if you go, look at a $400,000 condo, it probably isn't operating the same way as the state is leading on. So yes. I think it's definitely something we need to point out. Lastly, let's just talk percentage sold price to list price. This one is really unique because there is a huge change in the last month, and it's the worst number we've seen in years.
It is.
Yeah, you want to talk about this at all, Jeff?
Sure. And what we're really looking at here is looking at that luxury market really continuing to erode. Across the market as a whole, though, we're really hitting 97.5% as the highest of listed sold price. So we're really seeing
pretty
that coming.
Brutal. This is a rough month.
Really brutal. And you can even see it on the graph, how much of a drop-off it is from December to January. And why does this matter? Because this isn't including the concessions or any of that nature, or the repairs,
or the price drops,
or the inspection resolution. This is purely the number on the contract coming across. So what does this mean for your buyers? There's a lot of room to negotiate, right? Yes. This is a great year for buyers. For those buyers who are on the fences, is this the year with rates? Tell them this is a great buyer's market. Look at this data. Mm-hmm. On average, what this means is on average, if it's a $100,000 sales price, the average offer closing at is $96,000, right? That's a huge drop. That's a 4% off of sales price on average. So keep that in mind with your clients. Hey, we have the ball's in our side of the court for the first time in so long.
Go out there, be aggressive. Yeah.
Really help your buyers understand that, because I think that's going to be the key part of our market this year.
Yeah, I think the one thing that this shows so much is just buyers have the upper hand more so than in the past for a long time. They need to go out there, kick some of those buyers off the fence, because if there's ever a time to buy real estate, it's starting to look like 2026 is the year, which is great news.
Which is great for buyers.
Yeah, absolutely. It's great for
Hopefully,
buyers.
you're not selling.
Well, thanks for watching the video. Reach out if you have questions, concerns. If you need any other market data, please reach out to Tucker and I. We're always happy to help. Don't forget to subscribe to the YouTube channel to see more of our fun content.
Thank you, everybody. Take care.